How to track cost basis for old investments as a retiree. Are you a retiree trying to figure out how to track the cost basis of your old investments? This is a key step in managing your finances and understanding your tax obligations. Knowing your cost basis is essential for calculating capital gains taxes when you sell your investments. Let's break down how you can do this effectively. First, gather all your documentation. Look for old brokerage statements, trade confirmations, and tax records that show the purchase price and any fees you paid. If you cannot find these documents, you can log into your brokerage accounts to access historical transaction records. This is a great starting point. Next, consider contacting your brokerage firms. Large firms often keep records of cost basis, especially for transactions made after the year 2012, when reporting rules became stricter. However, for older investments, the records might not be complete. In such cases, you may need to provide your own documentation. Now let's talk about cost basis methods. One common method is first in, first out, which assumes that the first shares you bought are the first ones you sell. This method is often used for stocks purchased on different dates. Another option is the average cost method, which is frequently applied to mutual funds. This method averages the cost of all shares you own, making it easier to track gains or losses. It is also important to adjust your cost basis for any corporate actions. This includes stock splits, dividends that you reinvested, and any return of capital distributions. Keeping track of these adjustments is vital to ensure you do not end up overpaying your taxes. Maintaining personal records is another smart move. Since brokerage records might be incomplete for older investments, it is wise to keep your own detailed records. You can use spreadsheets or financial software to help organize this information, making it easier to access when needed. Additionally, review your tax forms carefully. The Internal Revenue Service Form 1099-B is provided by brokers after a sale and reports your proceeds and often your cost basis. If the cost basis box is empty or incorrect, you will need to rely on your own records to report accurate information on tax forms like Form 8949. Lastly, plan your withdrawals and sales strategically. Knowing your accurate cost basis will help you estimate your capital gains taxes and plan your withdrawals accordingly. This is crucial for budgeting during retirement. For example, selling investments with a higher cost basis first can help reduce your taxable gains. By actively tracking and verifying the cost basis of your old investments, you can ensure accurate tax reporting and better manage your retirement budget. Collect your historical records, confirm your brokerage data, apply the right calculation methods, adjust for corporate actions, and keep personal documentation. This approach will help you navigate the complexities of capital gains taxes and support your financial wellness in retirement.